Hi, I'm Grace Pedota with the Canadian Securities Exchange. We are here today at the Empire Club with notable thought leaders to discuss their investment outlook for 2019. David, can you please elaborate more on your recent Globe and Mail article?
Well, it was basically about the outlook for Canada, and there's many more downside risks than there are upside potential as far as the economy is concerned. I think we're going to be hit by the lagged impact of the Bank Canada rate hikes from last year. It's going to hit the credit-sensitive sectors, especially housing. We have a situation where the stock market's come down, housing prices in many parts of the country are coming down, so this is what economists call a negative wealth effect on spending. That's going to have a downward impact. And one of my favorite indicators is actually called the OECD leading indicator, which is a global growth momentum forward-looking index, and it's down 11 months in a row. And we have to consider that Canada is a play on the global economy. So we have these three things, hitting home: the lagged impact of the Bank Canada's tightening, the negative wealth effect, and basically, if not a global recession, a global slowdown that's going to come back and bite our export picture. So it's going to be a very challenging year for the economy.
In a recent Globe and Mail article talking about market volatility, you quote the pylon effect. Can you elaborate on this for us?
Well, yes. On a given day in the markets, probably 10 to 15% of the people involved are actual investors looking at fundamental value in companies. The rest of the participants in the market can be algorithmic traders trading off of some formula, hedge funds, high-frequency traders, and ETFs, exchange-traded funds, realigning their portfolios. So the market is a little bit thinned out of real investors, and as a consequence, the gamesters, that is the people who trade momentum, can really swing a market around, and we've seen that over the year end. And once you have the algo traders and the hedge funds pushing a stock down, then the exchange-traded funds have to realign. So you have this pylon effect of people having to follow a trend and not connected to fundamentals. For example, a lot of exchanges now have really become more like gaming institutions. What an exchange used to be would take a person's idea and match it with another person's money and create capital. I think one of the few exchanges that do this in North America is actually the Canadian Securities Exchange, where we do help people build companies and create long-term capital.
So what is your outlook for the Canadian Securities Exchange in 2019?
Well, we're looking at a lot of business that's actually in the door already. People would expect that it's primarily or predominantly cannabis issuers. But in fact, one of the indicators is that a number of mining companies are also in the queue as we speak. And again, looking back at 2018, we had about 130 companies join the exchange over the course of the year. 57 of them were actually in the mining space, which again is kind of interesting given the difficulties in a number of the important commodities in the mining space. But again, cannabis is obviously going to be an extremely important part of the new financing on the exchange over the course of the year. We'll continue to have a number of large U.S. producers that will be going public in Canada over the course of the year, and we'll be continuing to develop that business line. And then I think we'll start to see companies coming to us internationally. So 2019 will be 2019 will be the year we see companies from Israel, companies from the Caribbean basin, and I think we'll start to see some European companies later in the year. Again, we're seeing liberalization of regulations in the UK, in Germany, in the Netherlands, in Italy, Malta, and we have a number of entrepreneurs that we're starting to work with that are looking to take advantage of those changes.
You said that global energy is on a hinge of history. What do you mean by that?
Well, I followed the global energy matrix, and when you really look at the pieces and understand the various technologies and the way that society, government, and industry create energy, move it from point A to B, and also the way we utilize it, it's changing. It's going through a quantum leap, and effectively, it's going to be increasingly electrification. We have right now, as we speak, about 19% of final energy usage is electrification. That's going to climb in the next 30 years or so to about 50%. That's because when you decarbonize the energy mix, that requires increased electrification when you think of an electric bus or electric car or trucking fleets and taxis and things like that. So to enable this, it starts slowly, as people have witnessed with the electric vehicle, but when you get critical mass and when you get the take-up, it just goes parabolic. What is the enabler of this electrification? Copper. So what was the most important commodity, CAGR growth-wise for the last 100 years, which was obviously oil. People are going to see, in my opinion, yes, it's important to the global economy on how that's doing, and that's cyclical. So even in a negative series of quarters, in the long run, you're going to have very stable, the basic human progress, but now you have a new hidden driver of demand, which is a pervasive use of electrification across all continents, across all societies, and effectively through all applications. So that's why I believe that this is a hinge of history, like we had 100 years ago with the discovery of the first oil gushers and the internal combustion engine.
Thank you for joining us today. Make sure to follow us on social media for the latest updates on our listed companies. And for more insightful content, make sure to pick up our free magazine, Public Entrepreneur.